Welcome back to the Lone Ranger Radio Show. Bruce Woodburn, CrossCountry Mortgage. We got a lot to talk about, and we only got 15 more minutes left. So we covered the Fed rate, dropped a quarter point. What did it do to interest rates? Drove them up a little higher. Okay, I think they're going to come back down this week. My sweet spot is 3 weeks to 1 week before a Fed cut, not after the Fed cut. I keep telling you folks that, but you want to wait till after the Fed cuts. Are you paying attention? You got to listen to this. This is money for you folks. And most people don't realize that. They don't realize that a Fed cut does not mean lower interest rates after the Fed cut. It oftentimes means higher interest rates. Now, they'll eventually come back down, but immediately, not so much. So we saw a huge increase on the bond market. They did, matter of fact, when I say an increase, the yield decreased and it caused rates to go up about 30 basis points on the discount. So that's about $300 per every $100,000 that you spend. So if you listen to me, you're going to know that the next opportunity is going to be sometime between November. Let's see, the next cut is going to be potentially on December 10th. Now, there's a 94.5% chance he's going to cut. However, I need to keep an eye on that because I think that percentage is going down because he announced, the moron today, Jerome Powell on Wednesday, announced that there was no guarantee of a Fed cut in December. He thinks the quarter point's going to do you. Now, they're afraid of inflation. That's why they're not just ready to jump at the Fed cutting a Fed rate. But I think it's a big mistake. We need another Fed cut. I think it should be a half a point. However, it is what it is. You be prepared that your sweet spot is going to be somewhere between, I'm going to say, November the 27th and let's say November the 24th, all the way up to December the about 8th or 9th. Okay. Don't go up to the 10th. You're going to be surprised. It ain't going to work out for you because that's the day of the announcement. It's not going to work out. So if you want to refi, that's going to be your sweet spot. Okay. Now, could rates go down eventually? Of course they can, but nobody knows when. Nobody knows. I mean, if you asked all the economists, they thought we were going to be in the mid fives by this time. They all thought we were going to be in the mid fives. Now, I didn't. I told you we were going to be in the low sixes. Guess where we are today? We're in the low sixes. I told you that. I've been telling everybody that. You're dreaming. I got clients that don't want to refi right now because they want to wait till rates hit 4 3/4. It's not going to happen. Not in this lifetime. Not in the next 10 years anyways, unless we had some type of catastrophic issue like COVID. And even if we had COVID again, they wouldn't do it again because they realized what a mistake that was. So I don't see that happening, folks. So don't be foolish. Don't be foolish. If you can save money and that money that you save per month has less than a 36-month break-even period, it's worth entertaining. But pigs get fat and hogs get slaughtered. Don't be a hog. Greed won't get you anywhere. And I got clients right now going, you ain't doing it until they hit the 4s. Well, you know what? Then let's convert to a 15-year, and then we might be able to get into the 4s. And that's been popular with folks too. 15-year mortgages. You want a 15-year mortgage? You're going to pay a little higher rate. A little higher payment. You'll have a much lower interest rate. You'll save tens of thousands of dollars, if not hundreds of thousands of dollars over the life of the loan. I did a 15-year mortgage on mine. Now, you have to be very solid in your income to do a 15-year. I don't suggest it for people that are riding a fine line. Don't do it. You can always pay a 30-year mortgage in a 15-year period, but you can't pay a 15-year mortgage in a 30-year period. Don't work that way, folks. So if you're interested in a 15-year, I love them, but only for the right people. You got to make sure you're doing the right thing. Okay. Now, so we got the Fed cut. It went the opposite direction on interest rates, but I think that'll come down probably this week or next week. We'll start seeing we'll see the rates relax a little bit as far as that's concerned. Now, the news out there, you'll probably see rates plummeted or the Fed drops the Fed rate and everybody should go refinance. They're lying to you, folks. They're lying to you. Now, am I saying don't refinance? No, I'm not telling you to do that. I'm not saying you don't. I'm saying I don't know if you should or not. You know how I do know? I run the numbers, and the tea leaves tell you whether you should or shouldn't. So I look at the numbers and I go, and I have some clients that I'm doing right now. I'm refinancing VA and FHA. Absolutely. There's opportunities right now. Conventional, not as many, not as much of an opportunity. Conventional interest rates are not as attractive as FHA and VA right now. So some of those folks, it's not worth refinancing, but it might be worth refinancing to a 15. So if you're interested in that, let me know. Here's another thing. For all of you folks that don't want to refinance because you got a 2.5%, 3%, 3.5%, 4% interest rate on your house, I don't blame you. I don't blame you. But don't go getting a high interest rate second mortgage and think that you're saving your first. Because if you got a 3.5% fixed rate on your first and you got a 9% rate on your second, you don't have a 3.5% rate. You got a blended rate of about 6.5 or 7%. So you got to look at the whole numbers, folks. And I got a client right now. They're like, hey, I only owe $125,000 on my mortgage, and I need $175,000 second mortgage. I'm like, well, just refinance the whole thing and put it all together. Oh no, I don't want to get out of that 3.5% mortgage. So you want an 8.75% mortgage that's 20% higher in loan balance than your first mortgage? Well, that doesn't make a lot of sense, but it's an emotional thing for them. It's a psychological thing for them. You know, math is not psychological, folks. Math is math. It makes sense when you do the numbers. So come to me, we do the numbers, we determine whether it's right for you or wrong for you. There's a couple clients that I had this week. I said, let's wait for another Fed cut and see what happens. Let's wait till maybe the end of the year because I don't see the benefit for you right now is enough. And others are the opposite. I'm like, dude, I can save you $800 a month right now, and you're telling me that's not enough money? You are greedy, and you will pay the price for it. Those people get kicked in the ass, and they wonder why. Oh, I should have done what the loan arranger said. Yes, you should have done what the loan arranger said. So write my number down, 813-213-4009. I'll say it again, 813-213-4009. Or go to WeBringYouHome.com, get your application started. Call me in Orlando, 407-706-3313. Now listen, here's another thing. For those of you that don't want to refinance, but you do want a home equity line of credit, I got the best home equity line of credit in the market. Takes you 5 minutes to apply. I close in 5 days. Okay. Go to WeBringYouHome.com. You're going to see 2 application buttons on my website, WeBringYouHome.com. 2 applications on my website. One says purchase refi, one says home equity line of credit. Where do you think you go for a home equity line of credit? To the home equity line of credit button. You push that button. It brings up an application site. You complete the application. Takes you 5 minutes. Then it's going to ask you for documents. You download your documents. Now, my second mortgage, my home equity line of credit is 100% AI. It's not Bruce. It's AI. So you don't have a lot of people to talk to, but it's simple, easy, and it's got great rates. And it's super easy. You should all have one. Don't wait till you need a home equity to get one. You should always keep your house at 80% loan to value. So if you got a $500,000 house and you only owe, say, $300,000 on it, you should be getting a mortgage to fill in the gap, but always keeping a 20% equity. So you do the math. You got $500,000 times 80%, which is 400,000, and you owe 300,000 on it. Oh, there's somebody calling me now. You owe 300,000. You should be getting $100,000 home equity line of credit. Now, here's how they work. You get the home equity line of credit. I give you the 100 grand. And then you go, well, Bruce, I don't need the 100 grand right now. I just want an emergency. You put it back in the account. That's how you do it. Put it back in the account. Now you have it to use whenever you need to use it. Go to WeBringYouHome.com. Everyone needs one. So I'll tell you a story. I have a client, great guy. His name's Garth. He's been a client of mine. Done 2 mortgages for him. He's had a great job, making 250 grand a year. Lost his job. It's hard to find a $250,000 a year job, isn't it? It is. So he lost his job. I told him before he lost his job, because he even called me, he goes, I'm a little wishy-washy about my job. He goes, if I don't have a job, I got to figure out how I'm going to make my payments. I said, go get a home equity line of credit. He didn't do it. He lost his job. Now he can't get the home equity line of credit. Now he's wondering how he's going to make his payments. It's a very sad situation. And he had a baby. How do you like that? Don't let that happen to you. You need an equity line for an emergency all the time. Go to webringyouhome.com. All right. First-time home buyers. We hadn't been talking about first-time home buyers. Anybody that wants to jump in the market, if you don't get in the market right now, I'm going to tell you, you're going to make a huge mistake. Because right now, there's 3 homes on the market for every 1 buyer. Actually, 3.5. What does that do for you? Puts you in control. Now, you use one of my realtors, I'll get you 25% of their commission back in your pocket. By the way, I had 2 clients this week came to me. They chose their own realtor. Then they came to me later and they went, yeah, Bruce, I think maybe I do want to talk to one of your agents. Both of them, I switched them 2 different agents because they're in 2 different locations. Bang. Got them under contract. They're like, that was the best decision I made. We've been searching for 3 months, hadn't found anything. Your agent finds it and negotiates a deal. I'm like, that's what I told you. I mean, you think I'm telling you this is like an advertisement? This isn't an advertisement. This is me spending my weekend on the air with you to make your life better. I could be on my boat right now with my wife waiting for me, but I'm here with you. Why? Because you deserve a better life. But if you don't act, I can't help you. You sit on the sidelines. If you want to be a renter for the rest of your life, keep doing that. Keep procrastinating. It'll work great for you because I'm going to tell you something. The average renter in America has $10,000 to their name. The average homeowner in America has $230,000 to their name. Average. My son makes 50 grand a year, works for a nonprofit. Used to work for me, made a lot more money, wanted to do something charitable. I honor him for that. I love it. But he lives paycheck to paycheck. His wife's a teacher. She don't make squat. Okay. They do good things for this world, but they don't make money. But I required him. I said, when you get out of college, you got to buy your first house. So he went to work with me. He saved up enough money to put 3% down on a conventional loan. I hooked him up with a realtor. The realtor gave him a rebate. I hooked him up with a realtor. They negotiated all the closing costs. So he got him for 3% out of pocket. He's owned the home for 4 years and it's up $180,000. 180. Okay. How many of your 27-year-old kids have 180 grand in the bank? Raise your hand. $180,000. He could not have saved that money no matter what. Even if he ate freaking hot dogs every day and nothing else, he could not have saved that much money. It's impossible. Real estate will grow and you have to live somewhere anyway. So stop being foolish and give me a call and let's get you into the market and stop paying rent. Rent is 100% interest. There's no principal. You get nothing for it. So stop being foolish. I will help you. I'm committed to helping you. I want to help you. I will straighten you out. And grandparents that have adult grandchildren or adult children that are renting right now, you get them in front of me. You get them in front of me now. We're going to fix that problem. And you better do it soon because as soon as interest rates drop to 5.25%, 5.5%, which they could get to by mid-year next year, there'll be no buying opportunity for first-time home buyers because we're going to be back full swing seller's market. That means, oh, I want 10,000 over ask price and I'm not fixing the roof and I'm not paying any of your closing costs. Is that what you want? And that's what you're going to get. My name is Bruce Woodburn. I absolutely cherish the opportunity to be in front of you. And I love the opportunity to help your family. Call me at 407-706-3313 or 813-213-4009 or webringyouhome.com. God bless. I look forward to hearing from each and every one of you. I'm always there. Have a great weekend.